Hello, oracles and money lovers. Welcome back to, I guess, lucky or unlucky episode number 13 of Tesla Weekly. Vin, how are you doing this week?
A perfect episode for today as the unlucky streak continues, as the market continues to crater.
Oh my God, yes. We have just been getting decimated lately. Oh my God.
And I've been reading, some macro stuff. Funny because I never really cared about, I never paid attention to all this stuff. I was always just kind of focused on the company's long-term vision. But I feel like in this market, you have to pay attention. I mean, I haven't sold any Tesla shares, but I have trimmed some other positions just to free up cash for if we do just keep dropping here, because, I want to go to my high conviction plays. I want to be able to load up on the Teslas. So I have sold a couple other things. I sold some of my Facebook position, about a third of it. We could talk about that maybe in a little. But I have been, reading up on just macro and looking at past crashes, and got some really interesting stuff. For example, in the 2000 dot-com burst, and then also in the global financial crisis of 08, 09, growth stocks tend to bottom before the indices. So growth stocks have historically kind of bottomed, a few weeks or a few months ahead of the indexes, which took longer to get to their bottom. And when I look and I see these growth stocks down, in some cases 70, 80, 90%, I feel like there's a good chance that it could be pretty close to the bottom for those. I mean, I don't know how much further they could really drop here, and the index maybe has some more room to fall.
Yeah, I know I've been hearing numbers like NASDAQ down to 10,000. So obviously still another 10% to go for that to hit that. But I mean, could it happen? It could. I don't know how far further we can go. I've got subscribers on my channel who are like, hey, you know what? I think we're going to go down to 100 or 130 in Tesla. I'm like, I think you're nuts, but it is on my radar as a possibility, because who knows? There's quite a few stocks out there, especially these growth stocks, who are down to pandemic lows. When we crashed during COVID, these stocks are now down to those levels. Snapchat, for instance, I owned Snapchat at 17. The whole entire market crashed. I ended up selling out around 16 because I didn't know. And for me, Snapchat was not a stock I wanted to be in. So I sold it for almost break even. And now it's down below that again. I mean, we're now down below where
basically all of the gains in this last 2-year run have been completely erased. We're back to where we were, at the depths of the pandemic almost. And with Tesla, I would find it hard to believe Tesla getting down to the hundreds, let's say, but I am shocked that it's gone this far. So nothing is off the table here, and like anything can happen. It is pretty mind-boggling. And another thing that's interesting too, in 2018, we had like a pretty decent correction. The software companies as well, they bottomed a couple months before the indices. In that case, another thing that was really interesting is commodity prices. They're like the last bastion here of like crazy all-time highs, but it tends to be commodities are the last one to crack, and when they do, it will be swift and hard. So like oil, for example, who knows when exactly this will happen, but it will happen, maybe in the next few months, maybe it takes a year, but we're going to get to the point where oil, dramatically drops 30-40%, and a lot of the other commodities that are just at ridiculously high levels right now as well.
Yeah, I'm actually curious because, my industry, I'm in construction retail, and, we deal with commodity prices a lot, steel prices when it comes to the plastics and the resins for all the pipe that we sell, like we get hit with it all the time. So we're constantly getting price increases. So I'm just waiting till we get to the point where we don't get them anymore, because ours are still going up. Inflation is still there. And,
are they all at like all-time highs?
Oh yeah. Yeah. They're stupid high. Like some of our stuff is like 4 times the price as it was 2 years ago. Wow. It's like lumber, but not as bad as it was at the peak. It's ugly, and I was noticing too, like stock prices obviously were inflated. People can argue, for the last 10 years, we needed a good long-term recession or a bear market, like we have, because it usually goes through a 10-year cycle. And I'm like, so we were due for that, but we were due for that before COVID. So the COVID crash came and went, and we exploded higher than that. So it would reason that we should pull back to pre-pandemic levels and then a little further past that. So that's why it would make sense to go down to the pandemic lows. So I think we're getting close to there. Whether it's actually going to be the bottom or we have further to pull after that has yet to be seen. But you have to remember that in the last 2 years, companies did grow still. So it's not like the pullback is going to be the same because you're trying to balance it off of companies that have still grown. But, we could still pull back and sit here for a while.
Yeah. And, there's a couple things, we're seeing obviously a lot of disappointing earnings reports, quarterly reports compared year over year, which I feel like is unfair because obviously every company was selling more from, Apple iPhones to Victoria's Secret, like everything. When people were getting blasted with these stimulus checks, we're spending money. It's like, we're not, it's unrealistic to expect businesses to outdo 2020, 2021, sales. And yet every company is going to get punished because the growth is going to decline. But I'm sure if we compared it to 2019, it is more nominal. It's probably a more gradual increase, like back to kind of normal. But the other big problem is, like, even if we get good reports, like we were kind of talking about before we started recording, you get a little pop and then that, maybe you get a 5% pop and then 3 straight days of -7%, -10%. And you can't win. It's like, even if companies are doing well, everything right now is secondary to the Fed. It doesn't matter if a CEO is buying the stock. Nothing matters. It's that, CPI has to come down before the Fed can pause. The Fed is completely focused. Their two jobs, they don't really care about the stock market. They're there to solve inflation and to keep the job market healthy, the unemployment rate healthy. And, those are the priorities. So we're not going to see these rate increases go away. Do you hear some barking in the background?
Oh, good now.
You're not going to see these rate increases go away until inflation is under control, and the stock market is not going to come back and, be back to the moon until these rate increases stop. So as long as inflation runs, I feel like the market is either stuck in the downtrend or at best sideways.
Yeah. And if the Fed's, their goal is always to get us down to 2 to 3% inflation. So until we get to that point, the Fed's going to be raising rates. My thought is going to be similar to what Kathy thought is, the Fed might actually overshoot and raise rates too much. And then inflation is going to catch up and go too low, and they're going to have to lower rates, which I think that is going to be a huge signal for a turnaround in the market, very similar to what we saw in 2018 when the Fed reversed course and the stock market took off again.
Yeah. And, it's everything right now is about the macro. Like, nothing else matters, as far as, like we said, like companies, doesn't really matter what they do. They're either going to get punished or punished harder. Nothing is going up, especially not growth stocks. But you know what? I mean, these are the best times to buy, when nobody wants them. I mean, it's tough because I was pretty much fully deployed in the market. So basically what I've been doing, I've done this a couple times where all my kind of like non-core positions, I haven't touched Tesla, obviously, my baby, but like I've, trimmed 10% here and there. I'm selling my non-core positions just to have the cash to, be prepared for if we do really keep sliding, because like we said, it's like nothing is out of the question at this point.
Oh, I know. And I've been doing the same thing. Anything I want to get out of, I'm trying to clear out with any little bit of profit I can. But, I try to refer to it like, let's look at $100 bill. Let's say Tesla is a $100 bill. Well, at its all-time highs, it was worth $100. So the way I look at it is right now, I can buy a $100 bill for $50. I mean, now obviously you have to have faith that that $100 bill is going to be worth $100 again in the future. But
$1,000 in the ARC price target realm.
Oh yeah. So I mean, you're looking at the value of this $100 bill, and if it's going to get back to its base value, if you had the option to buy it at $50, everybody would. It's stupid not to. So you just buy as many $100 bills for $50 that you can, because it's going to get back to that $100 value. Now, in our case with stocks, it's going to get past that. So you think about buying Tesla, at 50% off, knowing that it's going to be worth even more than it was before. It's a no-brainer.
Right. And again, just going back to the commodities, whenever they're going parabolic, the Fed's tightening here, assets are shrinking. I was reading a pretty crazy statistic that I found hard to believe, but this was as of a week ago, so it's even worse now. Roughly $13 trillion of global wealth has been eradicated in this bear market. And to put in perspective, during the great financial crisis of 08-09, roughly $17 trillion of global wealth was erased. So we're basically at the same level that we were then. I mean, this is like madness. Like how much further can we go?
And we got to remember too, though, because $13 trillion now has a lot less value than 17 trillion.
That's true.
Because inflation's so high. And that's actually something I was thinking about also when you mentioned it before about, all these companies who are selling more Apple iPhones and everything. I wonder if there's anybody who did a number of, all retail growth revenues versus how much money was pumped into stimulus checks. So, if we pumped in $4 trillion in stimulus and these retail companies grew $4 trillion on top of what they normally would have grown, it makes total sense. And that's where all the money went. And obviously, we're not pumping money into the economy anymore. So those year over year comps aren't going to be there anymore.
That's definitely true. I mean, that's a point because, figure, if there was 4 trillion in stimulus checks, all that money basically, or a very solid chunk of it, either directly or indirectly, either got invested in the stock market or bought products that inflated stock prices because they were doing so hot. So a lot of that, definitely pushed up probably an already, too hot of a market that we've had over the last decade.
Oh yeah. And now here's the real hard part, because I'm in retail, so I see it. Right now, comps, like at least for my company, we're still stupid high with our comps, but a lot of these comps are all because of inflation. And so, inflated numbers, everything, just the dollar amount that you're selling stuff for is higher. So your dollar amount's going to show, but what are the units that you're moving? And so what's going to end up happening is if you didn't grow the amount of units that you're moving, all of a sudden when prices do come back down or level off, your comps are going to suck because you didn't actually grow your customer base. You just grew your inflation dollars, which were basically a lie anyway, because it wasn't real.
Yeah, that's a great point. Another thing that cracks me up here is these analyst price targets. You got, this wasn't helping Tesla stock price, but, nothing can at this point, nothing short of divine intervention. So you got Daniel Ives, longtime Tesla bull, Wedbush analyst, lowers his price target. I'm sure they're all doing it, but he's just the one I was reading about. He had a 1,400 Tesla price target, lowered it to 1,000, citing the issues in China. These analyst price targets to me are about as useless as a poopy flavored lollipop. They increase them when stocks are doing well. They lower them when stocks are coming down. They're so irrelevant. Like it blows my mind that this is even like a real, industry.
I actually mentioned it the other day, and there was somebody else I had seen who lowered their price target as well, another bull. But I've always looked at it as look at the trends, and I look at price targets based on trends. And so when I'm seeing all price targets are going up or going down, like in Tesla's case for the last 2 years, even the bears were raising their price targets despite the fact that they had them, undervalued and all that. They were still raising their price targets. So now we're starting to see lots of other companies have their price targets coming down. We're finally starting to see the Tesla ones coming down. And other than with Dan Ives, most of it is all macro related. I just updated my valuation model, and my price target for Tesla came down from 1725 to 1267. And it's strictly because I dropped the production, which dropped the deliveries, and then PE compression. You can't overcome that. When Tesla right now is trading at an annualized PE of under 60, I think it's actually almost under 50 now. Like that's stupid low, but that's just the market that we're in. We are not in a growth market. We'll get back there, but right now we're just not. So I can't see us coming out of it that quickly. So that's why I had to drop my price target down.
Yeah, I'm just looking it up here. So the forward PE as of May 20, so even lower now, was 55, and the normal PE was 90. So those are even lower now. It's probably down another $100 since then.
Annualized is 55 right now.
That's crazy. I mean, this is a stock that 6 months, a year ago was in the hundreds, and then thousands a year before that.
I know.
But
And then just thinking about, we're coming up to Q2, and a lot of people obviously are assuming production is going to be down, which means deliveries are going to be down. So that's going to bring EPS down. So then if you go with an annualized EPS off of that, it could potentially bring the stock lower just because they're like, oh, if algorithms are basing off of PE, and a PE for Tesla right now, based on the algorithm says it should be at 50 or 55, it'll trade down to that. So if that still holds and the EPS drops, Tesla will end up selling off down to basically what the PE at the time is dictated by the algorithms.
Right. And we've got, the quantitative tightening coming up here, June and July, probably at least a 50 basis point hike in each of those, and possibly even more. I mean, we've got a hawkish Fed here who, just came out and said they'll do whatever it takes, basically. But, that's their job. They have one job, handle inflation and handle unemployment, or two jobs, I guess. But they're going to do whatever it takes. So I wonder if we see, oh boy, if inflation really is not under control, if they go 0.75 or even higher, I mean, that would absolutely crush the market.
Oh my God. So, and June 10th is the next CPI, and that's going to do it, because if with the gas prices still going up as they have been, if we can still show a drop in inflation for month over month, I think it's going to be a very good signal, because that means with even gas prices going up, we're still coming down. So we might not have to see the Fed going up higher, but Bostic yesterday had mentioned how, he's thinking probably don't need to go up too much higher in September, which goes back to our magic inflation going away come election time. That could potentially happen. So maybe we get a hawkish Fed, pulls the market down more, jumps up the rates, but then we get a more dovish Fed come the end of the summer going into election time, and then the market, does a turnaround.
Right. And it's interesting. We have, consumer spending, not for nothing, is holding up pretty well. I feel like that's like the last positive we have, because it's a strong job market, and consumer spending's been, certain categories are flat or close to negligible, but other categories are up, 2% month over month. I feel like that's the last bastion we have here. If that goes, like because people clearly still have money. I am starting to read about how people with lower credit scores are starting to default on, they're not making payments. They're 60 days behind. But it seems like overall, people are still, have a good amount of money. They're still spending money, because I can't imagine if people stop spending money, like in these companies' sales, they go down 50% when they have good sales. Like, what's going to happen when they really get cut?
Oh, I know. So looking at what's going on in the future too, we've got the housing market's most likely coming down. So if the housing market comes down, that could definitely trail off on consumer spending, because, once the jobs market levels off, last we knew there was 1.9 jobs for every one person out there to be employed, which is just absolutely insane. If you're a laborer out there and you're looking for anything, like, this is your market to be in. We had one of our guys at my job who got a good offer from another place, and we gave him a massive raise to stay with us. So you have a lot of leverage out there, but eventually we're going to get to that point where the spending is going to come down, housing market's coming down. Now employers, and we've already started to see some employers are starting to do layoffs, and they're letting people go. So this is starting. So whether it's going to be an actual recession or not, we are already starting to see this cycle going. The more that happens, the less money people are going to have to spend, the less people can buy houses, especially at the inflated prices that they're at. And they're looking at like, I don't want to get a 7 to 8% interest rate, so screw this. So we're going to have a lot more houses coming onto the market. And then when you're selling less houses, people spend less money on the trinkets they need for their houses. So everything is going to come down, which actually is a good thing. That in itself will help bring inflation down. So it's just a matter of how softly does the Fed land us with all of this, and how much of this is going to be a self-fulfilling prophecy of our own thoughts.
Yeah, I would be happy with the housing market coming down. That would be nice. But of course, yeah, I mean, they're both going to come down if, housing and the stock market obviously has already crashed. As far as, companies, doing layoffs now, and I know Facebook and Netflix are doing hiring freezes, as the growth slows down. But interestingly enough, Microsoft is increasing salaries. And I feel like it kind of gives you a better picture of, a lot of people, and I posted a video about Facebook, and I was getting a lot of flack for it in the comments just because I sold, and people were not happy. But I feel like I outlined the reasons why I sold, and no one was really refuting those reasons. They were just like, it's undervalued. And I was trying to say, there's nothing stopping it from becoming more undervalued.
Yeah.
And it especially when you look at just something like that, kind of gives you a picture. They're on a hiring freeze. Like, they're not anticipating things, getting over the hill here and things getting better. So I could also see a scenario where over the next few months, companies that were struggling are going to continue to really struggle, and the stock prices, will struggle with it. But maybe companies like Microsoft that are better off and kind of more stable, like, actually will, fare a little bit better. I'm sure that they'll come down too. But I just feel like, when you compare Facebook and Microsoft, I feel like Facebook has a lot further to fall, if you were to compare it to a Microsoft here, just because they're in a better position, it seems like.
Yeah. For me, the way I look at it with Microsoft, they're like a very, very solid foundation. And Facebook, not to say they're not, but it's not built as well. It's like, Microsoft is the ancient ruins of Rome, while Facebook is like the roads we have here in the US. And it's, strong enough and it'll last, but one was going to crumble before the other. And that's just how I've always seen Microsoft. It's just that powerhouse that, it's not going to get hit as hard as everybody else.
Yeah, it's interesting. Facebook and Google tend to, they've kind of been moving very similarly. And even Google's, taking a hit, and they're definitely, more, I think, structurally sound than Facebook is too. I mean, I think Microsoft's even better than both. But yeah, with Facebook, I just saw a bunch of problems, that all of a sudden, some of these are old problems, some are new, but like the convergence of the four. Facebook, obviously, terrible rap, changed their name to Meta. Never a good sign when a company changes their name, especially when you're that big, like you're running away from the bad connotation. And the public perception is terrible of the company. The political perception is terrible. It just, that vastly limits the upside, I think, because even if they were posting phenomenal numbers, like, they have this bad public perception, which, I mean, you could even argue over the past 10 years, Facebook's done well, but it hasn't done well as Apple, Microsoft and the others, because a lot of it could be from, scandal after scandal. Number two, you have the TikTok, threat, the dopamine casino that is TikTok, that, like, this didn't exist before, and the days are gone where Facebook could just acquire companies, or, they're trying to copy them now with this new Reels thing. And it just made me wonder, what is the longevity of a business that just, how long can you just copy and thrive off that? I feel like your upside's very limited.
Yeah. And I look at Facebook, and I thought about it the other day, looking at, Google and Twitter and the whole thing that's going on with Twitter and Elon. And I'm like, so if there's this many bot accounts that are out there, it inflates numbers. Let's put it into YouTube terms here. And, you get 2,000 views, but how many of those views that you're getting are bots that are watching it? You don't know. I have no way of tracking that. Nobody does. So, you wonder how much of these numbers are inflated, to numbers that aren't actually real. And then you think about the fact that ads are getting paid out to people on these numbers. So where is all this money actually coming from to pay this out? And, how much of this money is being earned despite the fact that they're not actually getting anything in return for it? So, you go back to Facebook, and their whole entire business is the same exact thing. It's all ad revenue. So how much of it is floated with bots and spam accounts versus, actual real people? And I don't know, and seeing as Twitter can't give us a straight answer as to how they, determine this, I'm going to guess that Facebook couldn't either.
Yeah. And the other big problem too with Facebook, I saw the whole metaverse move as the cherry on top to a fundamentally good business. It's not really panning out that way. It's a money pit. They're losing $10-12 billion a year just on losses with the Reality Labs segment. And that didn't make me feel any better on the last earnings call. Management basically says the metaverse won't be here in the 2030s. So, now I'm waiting 10 years for something that has a very high degree of uncertainty. It felt like it just feels like it's not the same company. And, when I looked at it and I was like, well, what would I rather have my money in, right now? Something like Facebook or Tesla. I'm obviously going to prioritize Tesla. Like, I just, the future just looks brighter to me. but people did not like that video too much.
Yeah, and one of the things that, and I've talked about it before, we are going through a very the era of disruption going on over the next few years. And I think one of the huge things that's going to get disrupted is FANG. And FANG, we've already started to see it going. And I have a feeling in 5 years, FANG is not going to be FANG anymore. And we're going to have some other players that are in there, like Tesla, NVIDIA.
Yep.
We're going to have some massive players that are jumping on. And
it's going to be TAMGA, Tesla, Apple, Microsoft, Google, Amazon, and NVIDIA. TAMGAN, I guess.
Yeah, and I mean, even Amazon,
Yeah, no, that's true.
They're not looking so hot, and I don't know, because I mean,
their margins were a little low to begin with compared to the rest, and yeah, they're hurting right now. Yeah,
I'm wondering, and their split's coming up next week, 2 weeks from now. I think they're next week, the 3rd. So we'll see how that affects it. I know, like my job, we're supplying 2 Amazon warehouses here in Connecticut. And we've already been told by them that once they're done building, they're just locking the doors for 2 years. They're not doing anything with them for 2 years. And I think part of it was a smart move, with interest rates being so low. A lot of companies were out there just buying up land and whatever they could in materials for very low interest rates to be able to flip this over. And even if they sat on it for 2 years and made nothing out of it, it doesn't matter, because they're going to make it up for the fact that they didn't have to pay the interest on those loans.
Right.
So that's my guess, but I know they're leasing some of them out over the next couple of years, but they don't have plans for these yet. I think they're maybe waiting to get maybe the Rivian van fleet up and running. Maybe that's part of their plan, and once they get a larger fleet on the ground, they can start opening up all these warehouses to get same day deliveries. So there may be something in the works for them, but as of right now, they're not looking so pretty.
Yeah, if I were, picking of the FANG stocks, I don't think I would choose Amazon over the others. I guess we should have called this episode Oracle Investment Club, not so much Tesla. Do you want to talk Tesla, or do we save it for next week?
Oh, we talked about Tesla a little bit. We got like 5 minutes. We can
throw some Tesla. All right. So I had some things here. So for those saying that Tesla's demand is drying up, California sales in 2022, if our demand for Tesla is up 83% this year, in stark contrast to all other brands, if I pull this up right here, that are literally cratering.
And that's not just EVs. They're not just the number 1 and number 2 selling EVs. They're number 1 and 2 selling vehicles.
So this is, top 30 selling brands in this is California. We'll get to the US in a second. Tesla up 83%, and pretty much everyone else just gets worse and worse here, as you can see. Chrysler down 58%. So much for Tesla demand drying up. Another thing that was interesting, auto, historically, the OEMs, they have a high CapEx rate. They're spending tons of money. It's a lower margin business. It's very cyclical. There's no recurring revenue, and, very fickle, consumer demand. And obviously we've got lots of competition here, but it just got me wondering, now that we're heading into like a rough time here and moving forward, even when we get back to the good times, how does legacy survive when so much of the revenue came from maintenance and EVs will require little to no maintenance? I mean, that's a huge problem I don't really hear anybody talking about. And yeah, you just tie that with the cratering demand. I mean, how does that demand magically turn around? I don't know.
Oh, I know. And you think about the fact that when it comes to legacy auto, their sales are based on selling them to their dealerships, not to actual consumers. That's up to the dealer to do. So the numbers could be slightly inflated because they're selling them to the dealers. And if the dealers don't sell them, it doesn't matter, because according to GM, they did sell them. So, those numbers can be swayed a little bit. So when you start doing direct sales on vehicles that they already say they're not making any money on, where are you going to get your revenues from? Where are you going to get your margins from? You're not. Like, you have no profits coming in. And if you're taking away the only segment of your business that was bringing in profits, you're toast.
Yeah, I mean, that's a great point too. I feel like I had a bunch of other Tesla stuff I'm trying to find here, but I don't know what I did with it.
Yeah, I know we've got Indonesia. Some rumors coming out of there. That will be exciting. I do have a feeling they're going to end up putting a factory there. I'm very much into the reading of body language, and Elon was very excited talking about Indonesia and the potentials there. So it sounds like the frustration they had with India is the complete opposite in Indonesia, and they really want to work with Elon and Tesla.
Yeah, I mean, according to the country's head of investments, it does sound like they are already building not only the battery factory, but also an electric vehicle factory, it sounds like.
That's what I had said. And even he said in his interview or his statement that he was like, nothing of this is confirmed, so we don't know. But, it sounds like that is what's going to happen. So I have a feeling by the end of the year, and I mean, we're shaping up for an exciting August. So we might get some of this news by the end of the summer about a new factory.
Yeah. And I found what I was looking for here. So the US sales overall for electric vehicles, first top 3 spots, Tesla. Model Y, 52,000 sold. Model 3, 47. Model S, 9,000. Fourth place, a distant fourth place, Ford Mustang Mach-E, just under 7,000 sold. And the rest are even lower. It just drops off from there.
Yeah. I mean, now, granted, yes, and I'm rooting for all of them to come up and have their vehicles as well and really drive us all to EV adoption across the world. But you can't catch up to somebody who's already a freight train ahead of you.
And it just came out too. Hyundai came out. Someone sent me this article. Hyundai investing in a electric vehicle plant. Guess what their numbers are? They are saying this plant will be built by 2025 and have a production capacity of 300,000. And this comedy just reinforces my belief that's growing that, I think we may see a scenario where Tesla, VW, and BYD maybe, or, maybe one or two more really gobble up 60, 70% of this market, and everyone else is going to be left just very tiny portions, fighting for, there's going to be 50 companies fighting for 30% of the market. I mean, at this rate, if that's true, I know they're building some vehicles elsewhere, but even now it seems like they needed a fire lit under the butt, and they still are not moving fast enough.
I know. I strongly feel like we're going to be very much like the smartphone market, and you're going to have, there could be a lot of players out there, but there's going to be 2 or 3 big ones, and the rest are just picking up scraps.
Yeah, with Tesla and an Indonesia factory combined with the 4 gigafactories they already have, I mean, they could get, if not to 10 million vehicles, pretty close to it, I would think. And at that point, most of the market, not going to be much left for the competitors to catch up in 2030.
Yeah, no kidding. And I just can't see them catching it. That's it. They're just going to take it. And these next 3 years are really going to show us what they can do.
I think that's a great place to wrap up. I guess we're running out of time here.
Yes, we're out of time. Thank you, everyone, for being here. Hope this brings us good luck going forward after number 13. And we will see you all later.
Yes, hopefully the worst is behind us.
Yes.
See you, Tim.
See you later, Ben.